So you raise your price target to $300. The stock is north of that, and you've been a chaser. Man, have you been a chaser. October 23rd, you go from 205 to 225. 8 days later, you go from 225 to 250. And today you go from 250 to 300. But the whole time you keep your rating the same at market perform. You have to explain to our viewers how you do that, because people are throwing their arms up in the air and saying, when is Tony going to get it? When is he going to get it? That this stock is just going higher and he's missing it.
Well, we have missed it, and we don't deny that. We raised our price target because we believe that investors are looking to the 5G cycle, which is fiscal 21, and so our estimates go from $13 in fiscal 20 to $16 in fiscal 21. And so if we apply a similar relative market multiple to the market on 21 earnings, which is where we think people are now looking towards, that's our price target. Now, let's not forget the tech sector was up 30+% during the year. Our target prices are always linked to where market levels are. And so if we start the year 200 in the tech sector, the market rent goes up 30%. Our price target for all our stocks would go up, all else being equal, 30%. And as I said, I do believe that people are looking forward in the 5G cycle, and we see significant earnings growth year over year in fiscal 21 for Apple.
The other part of this is that, and our prior guest, Mike Wilson of Morgan Stanley, mentioned Apple as an example of how investors are looking for quality. They're looking for quality names, and even things that could have a bit of a defensive bent, if people want to have that narrative around Apple, that it's kind of a defensive name. The stock just goes up.
Yeah, look, I mean, clearly the stock has, feels like it's gone up every single day over the last quarter or so in particular.
Or year.
Particularly pronounced in the last quarter. But I do think there is some truth to what you're saying around quality. The market has put a premium on quality. We've seen a bit of a rotation over the last 6 months out of more expensive stocks to less expensive stocks. And so Apple ticks both of those boxes. And as you were all discussing prior to my joining this, it's a huge index weight. And so you have that. We have a big buyback that's ongoing from Apple. They buy back about 5% of all shares traded in a given quarter. And so that's also provided a technical boost. Now, look, nothing goes to the moon forever, and that's the dilemma that we struggle with. We're well above consensus for fiscal 20, largely due to AirPods. We're well above consensus for fiscal 21. The question is the buy side and the average investor ultimately already there? And that's the difficult part about gauging if and when the music might stop. Right now, we see numbers going up, and that's generally pretty good. Now, many people on the buy side also believe that. And so, that's the tough call to make in terms of whether one continues to be overweight Apple or not.
I feel like in some respects, though, now you've kind of backed yourself into a corner in that the stock's appreciated so much. You've had a perform rating on it. So how can you get out of that corner and upgrade it anytime in the near future, even as shares continue to appreciate? It's going to be much more difficult for you to tell investors, even though the stock is at new highs and it repeatedly hits them, to buy it.
Yes and no. Look, I mean, I think as an analyst, you always have to be honest and true to your work. We did some work in December where we did a really deep dive into AirPods, and our conclusion was the street is mismodeling that people don't understand how big AirPods could be. We think they could grow 150% in fiscal 20. So that's new and incremental and positive to our model. And that could certainly be a basis for recommending the stock. And I think fundamentally we have no qualms with the fundamentals of the company. As I said, we're notably above consensus. I think the issue is really gauging, at what point is that all priced into the stock? Because we have consensus, which is sell-side analysts like myself, but we have investors, and I've spoken to many long-term investors who have been really bullish on Apple who just say, look, I think everything is great, but we're seeing a valuation that on a relative basis is higher than it's been since 2009, which is when Apple was in the peak of iPhone growth. So we're seeing Apple trade at a valuation that's at a 10-year high when the company is fundamentally a different and lower growth company than it was 10 years ago. And I think we and many investors struggle with that, and that's the dilemma.